All right, recording now, February 27th. It is a beautiful day and glad you guys are here. And this is my plan for today. If you guys have any questions or things we want to add to this list, I just announced we have extra credit tomorrow. Jeremy Barkley and Girmay Zahalai, two local Black politicians, and for Black History Month. And they are really up and coming politicians. So I would encourage you to come and write a short essay for extra credit. As a reminder, I grade all the extra credit at the end of the quarter. So my other class asked me if I max out extra credit this quarter because there's so many events, and I'm going to raise the threshold from 6 points to between 8 and 10. And if you can't come, there's a link in the announcement on this under extra credit, and you can stream in. Exam tomorrow, please come. 2:30, room C, 208, same room as last time. I will have extra calculators. I want to take a quick look at the calendar, talk about project 2, but really focus on test review for you guys. My thought was that you might have questions on a lot of journal entries. And these are kind of the big pieces of the exam, and they were on the practice exam as well. Adjusting entries, closing entries, perpetual journal entries for purchasing and sales, and periodic journal entries for purchasing and sales. And then we have a big new income statement, multi-step with lots of subtotals. And then for periodic, I am not requiring you to know the entire income statement. I want you to just get that for the perpetual because that's more common. But the place where it's different is how we calculate cost of goods sold. So that's what I want you to be able to do. Okay. And then there will be another trend analysis essay similar to last time. Okay. Do you guys have anything to add that you want to go over that I didn't mention?
I have a bunch of small questions that are kind of within some of those things, but
Yeah, me too.
All right. Are they related to the exam or are they other topics?
most
Related
of
to
the
the
exam.
exam.
Okay.
Yeah.
Same one for you, Cameron? Okay.
Yeah, I maybe have some small stuff on the
Okay.
project, but I could always ask you
The
outside
project,
of
you have project
Zoom.
questions too? C has project questions. And Amanda, you have exam review questions.
Yes.
Yeah, most of mine are on the exam too.
I'll give you an A. There we go. All right. Oh, and I do want to say, if you haven't made it in for your conference, you should feel free to do that. So it's always good to know what's going on. I won't have time before the exam because I will be at the business leadership community event, but you can always drop in any of my office hours. All right. Okay, so let's start with your questions, Amanda or Cameron, on related to the exam.
Let's see. I know that we always do like journal entry descriptions when we're doing other kinds of work, but are they going to be on the test or are we going to omit them again?
Oh, that's a wonderful question. No. For journal entries, no description required.
Great.
And I had a question about calculating the equipment depreciation
Uh-huh.
for the journal entry. I just didn't know how to do the math there.
No
I looked at
problem.
the
Are you
practice.
talking about the practice exam?
Yeah. Question number 1. I think it was journal entry number 3.
Well, you'll be a little shocked to know that I thought I had opened up your practice exam, but I had opened up accounting 202 practice exam. So I don't think you guys want that one. So hang on.
Oh,
Let's bring up the, not yet, right?
yes.
Oh, I didn't. Okay, let's close it down. All right. All right, let's take a look here. I'm gonna bring, see, I was all ready with the wrong exam. So here we go. So silly. Okay, practice exam 4, 5, and 6. All right, come on. There we go. We'll go back over that. So you won't get a chart of accounts on your actual exam. That's just here for helping you review. Okay. All right, Amanda. So you said question 1.
Yes. And it was the third entry.
All right. So the equipment was bought for 70,000. There it shows on the balance sheet as of the end of the year. Can you tell me, can you see the test, by the way?
Yeah.
Okay. I keep asking that when I teach on Zoom because I'm always nervous.
Yeah.
What's the journal entry? And let's just put it in the chat. What's the journal entry for depreciation? It's one of the 7 journal entry, adjusting journal entries. So and you don't need to do the dollar amounts, just what's the debit, what's the credit. Oh, you're a fast typer. Austin, you're correct. And I was going to ask you guys to direct message me, but this is fine. Thank you, Cameron. Yes. Okay. So the journal entry is debit depreciation expense, credit accumulated depreciation. Okay. So get that down. When you're doing these problems, you want to book the journal entry right away because you know that if you're accruing interest, it's interest expense, interest payable. If you're adjusting supplies, it's supplies expense, debit, supplies credit, and so on. And so here it's saying book depreciation, okay? So now it's just a question of the number. And so for this problem, it says depreciation is booked annually. The equipment has a 10-year life, so you just divide whatever the life is into the cost, 70,000 divided by 10, and you get $7,000. If I said depreciation is booked monthly, you'd take that $7,000 and divide it by 12 for the monthly amount, okay?
Oh, I see.
So first we do how much per year, and you get 7,000. And then if we said, but I only want you to book it monthly, and I don't even know what that number is, but it's a smaller number. 7,000 divided by 12 is something close to 7, I think. Let's see. No, that's not right. Close to,
I got 583.
5833. Yeah. And for goodness sakes, don't put pennies on journal entries for my exams. I don't need them. We don't usually use them.
So just round them to whole
Exactly.
numbers.
The next
Yeah.
whole number. Okay.
Yeah. Now, if I said to you, it's booked quarterly, okay, you'd take that 5833 and multiply it by 3 for 3 months, and you'd get 17,500, okay? So it just depends on what the problem says. I would bring a highlighter to the exam just to keep you highlighting what dates are relevant, okay? All right, so here, similar problem, Amanda. Lock free paid $26.40 for 12 months starting in June, okay? Now, here it is, prepaid insurance 2640. Now, this is what I would consider to be a trick question, okay?
Mm.
All accounts. So, oops. So you bought it in June for 2640 here, okay? And it's for a 12-month period, and you bought it June 1st, okay? And it still has the same balance, 2640. So that's telling me that I need to adjust from June 1st all the way to December. Okay. Did you get, so first off, what's the journal entry for adjusting for prepaid insurance? Go ahead and throw it in the chat. And you will either get a prepaid insurance problem or a prepaid rent problem. So just use the right title. Debit insurance expense, credit prepaid insurance. Good, 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 good. Okay, you guys know that. So I would say take that 2640, divide it by 12, and it's some lovely number. Every time I pick up my phone, I have to put my password in. I don't know why. So that's 220, but 220 is not the answer. How many months have gone by between June 1st and December 31st?
I think it's 7 months
I think you're right. So,
because it's May 31 to December 31. I think that's 7 months.
I think you're right. So the way I do it, Austin, is I say June 1st to June 30, 1 month. The month of July, August, September, October, November, December. That's 7 months. Okay. So your adjusting journal entry is going to be insurance expense 1540, prepaid insurance 1540. Okay. All right. Any other questions on the adjustments? So this one's a pretty straightforward one. You're just recognizing you're moving something from unearned revenue to earned revenue. This one's really straightforward. You haven't billed the customer, debit accounts receivable, credit service revenue. And then your salaries one, debit salary and wage expense, credit salary and wage payable. And it's just a case of figuring out your dollars. Okay.
Oh, I have a quick question. The like on the answer key where it shows the T accounts, that's for our benefit or maybe for the final, right? We're not
That is for
supposed
your
to.
benefit. On number 7, is that where I put it? Here, can you?
Yeah, like that.
Yeah, yeah, I just show it so that it adds a little more explanation. So you started with 7450, I'm sorry, 2450 in supplies. A month has gone by or 6 months have gone by and now you have $700. What's your X? What did you spend? And that's your 1750. Now down here with salary expense, I like to lay out each day. So the problem says employees get paid $10,000 every Monday for the previous week. On Monday, December 29, employees were paid through the previous Friday, December 26, and they all worked the last 3 days of December. In other words, they worked Monday, December 29th, Tuesday, the 30th, Wednesday, the 31st. So if they're making $10,000 for 5 days, they're making $2,000 a day. Okay. So then I like to show this as kind of a little timeline. There's Monday, there's Tuesday, there's Wednesday, 222. So we owe them as of the end of the year, 12/31, December 31st, we owe them $6,000 that we haven't paid, that Lockfree hasn't paid them. Okay. All right.
But we're not expected to show that on the journal entry questions, right?
This little thing chart here, no, you don't need to. I like it. It helps me solve the problem and it helps me explain it to students, but yeah. All
Awesome.
right. Any other questions on closing entries? There's 4 journals.
The entry for closing closing the income summary, you can end up debiting or crediting income summary, right? Depending
Absolute-
on what balance it has.
Yeah, absolutely right. So like right here, this is how I do all my closing problems. I draw a line after retained earnings, if I can do it. I don't know that I can. Everything below this line gets closed. First, I close my revenue, then I close my expenses, close my revenue to income summary, close my expenses to income summary. Then I get the balance in income summary and I close that to retained earnings. And then I close dividends directly to retained earnings. Okay. And I read those. And again, I put the T account there so you know how to do it. You should know how to do a T account for retained earnings and income summary because you want to track that. So here you have debit service revenue, credit income summary, debit income summary, credit all of it. So you're emptying out all of those expense accounts, every one of them. So let's do a little practice here. So if we go back to this other trial balance where I had my, now obviously this is not a full trial balance, it's just selected balances. And well, that's not going to help me. Never mind. I wanted to give you a practice on closing, identifying closing accounts, but okay. So let's see if I can do another one. So I just want to be clear, you close each and every expense account. You close each and every revenue account. You always close dividends. Okay. Right. All right. Any questions on the perpetual journal entries? So what I like, actually what I like with the perpetual journal entries is, let me just bring this over. Can you guys see my PowerPoint?
Yep.
Yes.
Yep.
Thank you. I had to do a Zoom class this morning and the students were like writing yes in the chat. And I was like, no, just say it. I can't stand it. All right. Thank you for speaking out. All right. So I like this. This is in your book in Appendix 5A. And I made a copy of it in my PowerPoints. But this shows that side-by-side comparison between perpetual and periodic journal entries. Okay. Your first question, I mean, you've got 14 journal entries to remember. They're very similar, but the most important thing you do when you start reading a test, the most important thing you do is read the line that says, the company uses the perpetual inventory system, or the company uses the periodic inventory system. I cannot overemphasize that because the journal entries are very different. Where it's black here is the same. Where it's colored, it's different. So for perpetual, for the purchases, all the costs go to inventory. And as I said last week, you don't need to use the language merchandise inventory. You can just say inventory. So all the costs, so the invoice cost, the freight, if you return part of the inventory, you credit it. And when you pay, you get a purchase discount. All of those get booked perpetually to inventory. There's none of those specialty accounts like we see in periodic, okay? All right, so over here with periodic, we use 1, 2, 3, 4 new accounts, and they make a lot of sense. Purchases, freight in, purchase returns and allowances, and purchase discounts. But that's only in the periodic system, not in perpetual, okay? Those are the purchase transactions. Now these are the sales transactions. For perpetual, sales are a 4-line journal entry. The first pair is for sales. The second pair is for cost of goods sold. So you have accounts receivable sales, And now, because we're actually selling product, chapters 1 through 4, we were just providing services. Now we're selling inventory. So we have to get the inventory out by crediting it and debit cost of goods sold, which is a special expense account. We call it cost of goods sold because it's just the cost of the inventory. You also have to do a 4-line journal entry for returns. And we don't use sales as a debit. We use sales, returns, and allowances. Why? Because we want to track it. How many returns are we doing? So debit, sales, returns, and allowances. And you can abbreviate that. Sales, R&A, or ampersand A. Credit accounts receivable. Debit merchandise inventory. We're putting the inventory back. And cost of goods sold. And in my PowerPoints, I had you calculate cost of goods sold. You can also be given the gross margin percent, and then you know cost of goods sold is the difference between that and 100%. And finally, when we pay the bill, when the customer pays the bill, we get rid of the balance in accounts receivable, which is 1,400 minus 130. Customer doesn't owe us anymore. And then here's where we put that 2% discount. We debit sales discounts. We don't debit sales. And then here's cash. Okay. Now, on the periodic side, we do not track cost of goods sold perpetually. So we don't know what cost of goods sold is until the end of the period when we take inventory. So we just do the first 2 lines, and you can see they're the same, and no entry here. The first 2 lines and no entry for cost of goods sold. And then the third journal entry is the same for both systems. Okay. All right. So let's go back to. All right. Can you see the practice exam?
Yep.
Yep.
Okay. So these are so the first question we have to ask, this is perpetual. We want to know that. So we know it's, and we're going to have a combination of purchase transactions and selling transactions. Okay. So you have to really be on your game. Is it accounts payable or is it accounts receivable? Okay. And again, you don't have to do this, but I find that I like it. And that is, if I can do this, I don't know if I can. Yeah, here it is. Okay. So here's the company, and that company, Kai, at first they're purchasing. And so that means they're buying something from a supplier, and it's going to be accounts payable and inventory. And then they turn around and sell it, and it's going to be accounts receivable and sales, cost of goods sold, and inventory. Okay. So what I often tell students to do is write this down and put the company name at the top. The company name is Kai in this case. And I'm just, hello. That didn't work. Okay. And then real quick, let's go back to so Kai purchased from Pella. Pella's the supplier, also called the vendor. Okay. So then we're going to say Pella's over here. And because it's really easy to start getting who's the buyer, who's the seller, starting to get things confused. Let's go here. This is what I want. Okay. So between Kai and Pella, it's going to be inventory and accounts payable. It's a purchase. Okay. And then they sold to Kraft. Let's see. They sold to Kraft. And those are the only characters in this problem. Kai, the company, Pella, the vendor or supplier, and Kraft, the customer. Okay. And stop you, silly problem. And it's Kraft. Okay. All right. Pella is the supplier, Kai is the company, Kraft is the customer, and we are doing the books for Kai. All right. So I would use the PowerPoint slides that I just showed you and say for a purchase transaction, go ahead and throw it in the chat. Tell me what the debit and credit is using a perpetual inventory system. Don't do dollars yet, just the perpetual inventory system. Okay, it's not going to be supplies. It's because we're moving over to how do we track? Let's go to, it's going to be inventory. So debit inventory, credit accounts payable. Yeah, you got it.
That one confused me with the supplies because when I did the first part and I thought it's a construction company, the windows are probably going to be supplies, and then I got to the part where they were selling the windows, and
Right,
then I got it.
the difference between supplies and inventory, because it sounds the same actually. Supplies are something a company uses up, like printer cartridges or paper or oil for their car fleet. But inventory is something they buy and they turn around and resell. So, and you figured that out down here, right, Cameron?
Yeah.
So debit supplies, I'm sorry, debit inventory, credit accounts payable. And then it's just a question of 10 windows, 100 each, that's $1,000. Okay. Awesome. Okay. Kai returns one defective window to Pella. So again, we're still working with our purchase transactions. So it's debit inventory, sorry, down here, debit accounts payable and credit inventory. Okay. Okay. Kai pays the balance it owes. Now here's where it gets tricky because you have to look at dates. So the date here is the 12th, January 12th, and they purchased on January 7th. So we need to go back and look at the payment terms, which are 310 net 30. So they get a 10% discount. Sorry, they get a 3% discount if they pay in 10 days. So you have to take that discount. You want to take that discount, and they are paying within the discount period. 10 days would be the 17th, but they're paying a little bit early. So be debit accounts payable, debit accounts payable, credit cash, and credit inventory for that 3%. Okay. Now they're getting into selling transactions. So now we're going over to the selling transactions, and we're going to have a 4-line journal entry. You'll notice the problem doesn't give you cost of goods sold because they already gave it to you above. Okay. So they sell 5 windows. They mark it up from $100 to $250. Okay. So it's going to be accounts receivable sales for, how much is that? $12.50, I think.
Yep.
$12.50.
That sounds good. And then cost of goods sold, merchandise inventory, 5 windows at 100 is going to be 500. Okay. And of course, we have to put a return transaction in. They return 2 windows and pays the balance sold. Please don't ask me if this needs to be 1 entry or 2. You can certainly make it 2 entries, 1 for the return and 1 for the payment. I think the solution combined them. Let's take a look.
So it's okay to combine or do 2 for
Absolutely,
that
yeah.
kind of thing. Okay, cool.
So
Yeah,
where is it?
I saw that was on the periodic entries. There was like 1 return that was combined and 1 that
Yeah,
was
I think it's too
2
confusing
separate.
to have them that way. So here we have the return and here we have the payment. Okay, and then finally the company pays the freight bill and it's freight out. For some reason, we don't use the term freight out expenses much. We just do freight out, but it is an expense. So let's look at that. Kai receives a freight bill for shipping to Kraft. So remember our order there. Kai sold to Kraft, but Kai got the freight bill. So let's go back and look at that. Let's go back and look at those terms. Up here, when they purchased, it was FOB destination. And down here, it's FOB destination also. So I've told you that FOB shipping point is more common, which means the buyer always pays the freight. but we're showing you how the accounting would work if it were FOB destination. When it's FOB destination, it means the seller owns it until it gets to the destination. So if there's a freight bill, then the seller has to pay it. So that's why it's debit freight out, 120, and credit cash. Okay. All right. All right. Any questions about, so let's go back to what we're wanting to cover today. Because we've kind of done this far. Is there any, I'm just going to highlight it in blue. We've done those. Is there anything besides, anything else specifically on these remaining ones that you guys want to go over?
Just quickly before we move on to just double clarify. So either the single entry or the double entry is fine, or do you prefer the two singles for those
I don't care,
returns?
whatever you like.
Okay, cool. Thank
It's
you.
usually, honestly, it's usually listed as a separate date and a separate transaction.
Mhm. And the
So-
RNA abbreviation is fine even on the test.
Absolutely, yeah. And you can put I and V for inventory and AP and AR, just write clearly so your AP looks like a P and your AR looks like an R. Okay.
Can we go over the trends problem? It's for like earnings per share and I think gross margin. I think
Okay.
it's problem 6.
Yeah,
Let's
I
do
think
it.
I have some questions on
Oh
that
yeah,
too.
that one too.
All right, let's see if we can shut those down and hold on, find the. I have. Nope, I don't want that one. This one. Ah, okay. So PDF files are done in Adobe and they just put in a new version and they flipped the left and right sidebar. I don't know what they were thinking. They thought they'd be cool. And Teams did the same thing too. And was just like, all right. Okie doke. So here we are, and I'm saying, look at total revenue. And this is Lululemon. So we've got earnings per share given to you and gross margin percent given to you. Earnings per share is calculated by taking net income to 75.56 and dividing it by average shares outstanding of common stock. I didn't give you common stock in this problem. I'm just giving you the ratio, and I'm more interested in your ability to talk about the ratio rather than calculate it. You'll be doing a lot of calculations in the project. Okay, so the trends. So the first thing I want you to do is say, is this a favorable? All you have to do is one sentence. This is a favorable. The trend for EPS for Lululemon is favorable. And I'd like you to say the years as well. Okay. Oh, I don't have any room to write here. So let's do that over here. So the 3-year trend for Lululemon's EPS is, and that is the sentence number 1. You're just telling me what you're going to tell me here, okay? And keep it really simple. Can you see me typing?
Yeah.
Okay, perfect.
Mm-hmm.
Okay, thanks. All right. All right, so now I want some evidence. So we have evidence to support your thesis. Do not forget, I want numerical evidence and I want percent change. So you're going to be calculating that for me. You're going to be saying, what's the difference between, oh, and I should say the 3-year trend. I have one more sentence to write, sorry. From 2011 to 2013, the 3-year trend ending February 2013 is. Okay, I'm gonna take this away. I'll just put it down there. Okay, the 3-year trend ending February 2013 for Lululemon's EPS is favorable, unfavorable, neutral, or inconsistent. Okay. And then
Is inconsistent like mutually exclusive from favorable, unfavorable, or neutral?
so yes, it is. They're all
Okay.
different. So favorable, it's going up. Unfavorable, it's going down. Neutral, it's not changing significantly. Inconsistent means it went down 1 year, it went up 1 year, it went up 1 year, it went down 1 year. So you don't have a consistent trend. Okay. Of course, if you have an inconsistent trend and it does better the second year, everybody's pretty happy, but it's still an inconsistent trend.
Okay.
Okay.
And how flat of a change would something have to be for it to be considered neutral?
I would say for all of these ratios, the percent change should be less than 1/4%, something like that.
Okay.
Yeah, really low, Cameron.
Okay. So even like in the gross margin here, it's 1%. That's still an inconsistent, not a neutral.
Right. So like in gross margin, you're saying, let me get those numbers up. 55, 56, 55. I would not say that's neutral. I'd say that's inconsistent.
Got it.
So, all right. So we're just looking at we're just looking at EPS here. So you would get the net change in dollars. So remember how to get that. You take $1.29 minus 86, and you're going to get, let's take this guy over here so I can talk simultaneously. So my answer here, I don't give you the net change, so I should add that in. So we have 1.29 minus 0.86. So I'm just going to take all of this and I'm going to copy it in here, and I'm going to actually okay, so I would say this is a favorable trend. It's going up and it's going up. So I'm going to say it's favorable. Okay. And that's kind of, I'm going to put that word in there because everything else is neutral. The 3-year trend ending February 2013 for Lulu's EPS is favorable. So this is the only part that you're having to think about. The rest is just format. You're telling the reader who the company is, when the time period is, and what ratio you're talking about. So Lululemon's EPS improved. It began in 2011 at 0.86 and it rose to 129, a 50% increase, or let's just say that here, 43 cents. So this is what I want to add here. In 2012, it rose again to $1.88, a 45.74 increase. And again, I'd take the net change and I'd say $1.88 minus $1.29 equals an increase of 59 cents. Okay. Now I want to ask you guys, does everybody know how to calculate the net change increase? Do you guys know how to calculate the 50% increase and the 45% increase?
I think so, but I did have a question about the calculation on the answer key for the gross margin.
Okay, so this, and then let me just double check the other one. 0.43 divided by 0.86 is 34. Okay, let's see, did we make a mistake here? So we have, hang on guys, 129 minus 86 is 43 divided by 86 equals 50%, yeah. So let's put 2 decimals here, just so we know. Okay, so then our wrap-up sentence is right here. This is our wrap-up sentence. While the growth rate slowed, it went from 50% to 45.74. This is significantly this is a significantly favorable growth. Okay, something like that. All right, so let's look at the other one. So we have 55.49, 56.89, 55.67. Now, when you're doing so here's my deal. When you're doing percentages, so these, what I like about EPS is it's not a percent, okay? So this, let's just take this and go. So here is gross margin percent. And here's the answer in the solution manual. Okay. All right. So sentence number 1, Lulu's gross margin percentage was inconsistent over the 3-year period. That's sentence number 1. You're telling us what it was. You could say it's favorable, unfavorable, neutral, whatever, but in this case, we're saying no, it's inconsistent. Okay. Sentence number 2 comes your evidence. It began at 55.49 and rose to 56.89. I want to talk about this, a 1.27 point growth. Okay. So when you are taking a net change of percentages, you do not say a 1.27% growth. The way we calculate percents is this year minus last year divided by last year. And since we're already comparing 2 percents, I don't have you do a percent change when it's already a percent. So you're just doing a simple subtraction. So hopefully my math was correct. So 56.89 minus 55.49. It's 1.4. How did I get that? Is that what you're asking about?
Yeah, that was the one that I was.
Oh, my poor
about.
students. Okay, let's fix that. 1.4 point growth. And then it went from 55.67 minus 56.89, and that's 1 point. Okay, that one's good. Okay. So I'll send this out again on the trend and show that there was a correction. Okay. But what I want to draw your attention to is don't say percent change. All you're doing is subtracting 2%, 2 numbers that are already in percents. So you want to just call it a point change. That's the proper vocabulary. Okay. All right. So then put that up there. And then this is the improved. All right. Does that make more sense? So, and then this is 0.3. This suggests that while sales were increasing, costs were increasing at a faster rate. So that's kind of a next level analysis. So let me pull this down. So let's go back to the income statement. 7-Eleven, $1 million, 1.37. Great growth in sales. Okay, love it. And we had pretty significant growth in sales, but this was on your last practice exam, and we said, hey, the sales are growing phenomenally, but the percent of growth here is slowing down. Okay, and so the same thing is true down here when we look at it doesn't matter what happens to sales. The gross margin percent should stay constant because the percent of cost should stay constant. For example, if you sell 2 cups of coffee for $5 each, that's $10. And if your costs were 50 cents each, that's $1. Okay. And your gross margin should be the same. It just should go up. The sales, the dollars should go up, but the percent should stay the same. So if sales go up, your gross margin percent should stay the same, although your dollars of gross margin will change. And in this case, it didn't do that. So it dropped. So that's why I'm saying sales were increasing, costs were increasing at a faster rate. So let me go back to my latte problem. You sell a latte for $5 and your costs were, let's say, $1. Okay, so gross margin is $4. 4 divided by 5 is 80%. You sell 2 lattes, that's $10. Your cost is $2. $8 gross margin on $10 should still be 80%. But the fact that gross margin is going up and down, it's like costs are not in alignment. Something's happening to their cost. All right. So I will send this back out so you guys will have a better picture here. And see if I can paste it in. All right, our time is up. You had a question on the project, Cameron?
I just wanted to know if things like gross margin or net income should be capitalized, even if they're not at the start of a sentence.
Let's look. On this project?
Yeah,
Okay.
I noticed in the
Oh.
directions, I think they were.
Sorry, Cameron. You said capitalized, and I was thinking of it in terms of what capitalized means in accounting, but
Oh,
you meant a capital letter, right?
yeah, yeah.
Okay, so give me an example.
Say I was typing about the trend about gross margin or the trend about net
No.
income. Okay,
Lowercase is fine.
okay, cool.
Okay.
And then I have, if we have any time, I have a quick
No,
question
we
on
have a
the
couple more minutes.
multi-step.
Yeah, I can.
Just in terms of the very top on the multi-step, is it sales revenues and then you go into your net sales calculation, or do you just put sales at the top?
Say it again. I'm sorry, I got interrupted. Go ahead.
Like at the very top, do you put sales or sales revenues before you go into your net sales calculation?
And you're talking about the project here?
No, now I'm talking about the multi-step income statement. Sorry.
Oh, yes, you definitely do that. Let's go. All right, can you see this?
Yep.
So,
Yeah.
yeah, that's one of the important steps here. So, and when you do the project, so you start with sales, and then after you've subtracted discounts and returns, you go to net sales.
Okay, but if I were like titling the net sales section, is that necessary or not really? On some of our homeworks it had
You mean a title here?
yeah, like would you write sales revenues above that?
No, I don't think you need it. No.
Okay.
I
And
don't
then
usually see that.
for the like discounts and allowances, can I just stack everything like they are in this answer? I
Yeah,
don't need to write
this is
less discounts and allowances.
right. This is what's
Okay.
called a columnar or pillar format for a statement. And that's what you'll see on your SEC statements because you want to show 3 years side by side. When we just do one statement, we do indentations and all that kind of stuff.
Okay, cool.
Okay. All right. So 1, net sales, 2, gross margin, 3, there's also total expenses and income from operations. and then income before tax and net income. So there's like 5 subtotals on this statement. So just be mindful of needing to know those.
I think I got them. I think I have memorized, but
And Amanda, did
still
we answer all
practicing.
your questions?
I had one more question if we have enough time.
Were you curious about cost of goods sold?
Yes, I was.
Okay, so I think I have another one here. Here we go, right there. So I know a lot of you have put a lot of work into the cost of goods sold statement. I could see it on your practice exam posts. I need something very simple. I need you to be able to calculate cost of goods sold using a periodic system. Okay, so in this problem, let's see, where did it go? In this problem, you're given a big long list of accounts that's kind of throwing things off. Let's see, practice solutions. I want the practice exam and now I can't find it. But anyway, the prompt is that you get many more accounts than you actually need. You get enough accounts so that you could do a full-on income statement. And we don't need that. What we want is 5 accounts, beginning inventory, plus purchases, minus purchase returns and allowances, plus freight, minus purchase discounts. I don't care about the order. And we need to get to add those numbers, 1, 2, 3, 4, 5, and you get goods available for sale. That means everything we purchased with all the costs there, minus ending inventory, which we actually have to go out and count. And we know the difference is cost of goods sold. Of course, some of that could be shoplifting or something like that, but we just book it all to cost of goods sold, okay? So I don't need all those subtotals that the book has. I find them kind of distracting, but we're just really getting at the cost of goods sold. I mean, they do help. They tell you net purchases and goods before freight and goods after freight, but really it comes down to calculate goods available for sale, subtract ending inventory. And when it becomes to beginning inventory and ending inventory, oh my goodness, you guys have to be really careful because you have to look at the dates. Okay, let me just bring that up real quick and then I have to go to my other meeting.
So if we just put something like this short for cost of goods sold, then that's fine. We don't have to do all the extra stuff in the book.
Yes, yes, yes. Short and sweet.
Okay, thank you.
Okay, you bet. So like, here's what you got for multi-step income statement. And I just want to go back to the prompt here. Yeah, you might get extra information. Sales revenue, you don't need it. Sales returns, you don't need them. And freight out, you don't need it. You just need those 5, beginning inventory and freight in, purchases, purchase returns, purchase discounts, and then you subtract ending inventory. Okay. All right, I gotta go. I will put that revised essay back into the practice exam, and I'll send you guys out a revised exam so you know it's there. I'll put this back in, okay?
Okay, thank you.
Okay, guys, thank you
Thank
so much
you.
for coming
you.
by. This really does help
Yeah.
your results.
Yeah.
So, all right, we'll see you later.
See ya.
Bye.
Have a good
Bye-bye.
day.
Bye.